Hello from Moted Markets. This is Agro, will be with you to review the economic outlook in the week ahead, which is going to be the week number 15 in 2025. However, as always, let's first check what happened previous week and then we can see the week ahead. Previous weeks, more than everything, the focus was on new tariffs by President Trump and starting from February 5, which announced that starting at April 5, which announced that on April 2nd, as Mr. Trump called that U.S. Liberation Day. Generally, the data on the economic front also, the data which we had, generally they showed a little bit improvement in the manufacturing sector by the PMI numbers that we had in most developed and developing economies. In Europe, in Eurozone, we had inflation numbers showed that the Eurozone inflation slightly lowered, which can support the idea of continuing the rate cut in next month, while the unemployment rate also lowered to 6.1%. But the event of the week, as you know, it was the US NFP numbers. By labor market data showed that the U.S. unemployment rate increased to 4.2% from 4.1% in the previous week, while the overall while the overall newly created job increased to newly hiring, actually new hirings increased to 228,000, much more than 137,000 expectations. But since the previous month's 151,000 initial estimates decreased to 117,000, that support the unemployment rate to increase higher. Generally, the data showed that while labor market in the US is still showing still somehow we can say is strong, but still showing some sign of cooling, and we have to wait for weaker data, for weaker digits in new months, especially with the new policy that we have in US administration, which they're seeking after less government spending and less government jobs. So this uncertainty in the job markets in the United States can support the idea of the need of more support by Federal Reserve and maybe more rate cuts, especially if this week's inflation numbers shows, as we are expect to shows, as market expect shows that inflation is also under control. Generally, the market previous week moved by these numbers and in the tariffs. However, at the end of the week, we had Mr. Powell's speech, where he mentioned that we are not in hurry to cut the rates and we have to wait and see the more adjustment in the market after new tariffs, after applying the new tariffs. So the Federal Reserve is not in hurry to cut the rates and change the policy. So that support the US dollar index to increase in last hours of the week. In the week ahead, economic data, economic calendar is not so much busy, but still we have some data to watch, such as inflation numbers from most developed and developing economies, especially from United States. And also we have the central bank meeting in New Zealand, where the RBNs are going to decide about the interest rate. Let's check what day by day. On Monday, we have the housing markets. The inflation, the housing market inflation in the United Kingdom, where we expect to see a little bit increase in the house price generally across the United Kingdom, while the mortgage rate also mortgage rate is slowly going down from 7.33%. Probably we will have about 7.25%. On Tuesday, EIA short-term energy outlook will give us more insight about the energy market. However, I should mention that previous week, while we were expecting, that the OPEC Plus was planning to increase by around 250,000 barrels per day to production to recover its 2.2 million production cut that we had 2 years ago, to replace it step by step, month by month, by mid of 2026. However, the previous week, suddenly they announced that this new implements and these new productions, increasing the production, increasing supply will be 411,000, sorry, per day, not 250, much more than 250,000, which the main reason is because of the new pressure by United States on Iranian and Venezuela oil sales. So which means that probably they're trying to replace the lower productions or lower sale by Iranian and Venezuelan oils. Generally, that pushed a little bit pressure on the oil market, while the other reasons, such as the lower economic growth expectations, also putting pressure on the oil market and energy market generally. On Wednesday, the day will start. We'll start the day actually with the central bank meeting in Venezuela, in New Zealand, where we expect the RBNZ to cut the rates by 25 basis points. We know the New Zealand economy is improving slightly better than compared with the previous quarter in the fourth quarter 2024, but still it's still weak. While on the other hand, the inflation is under control. So the central bank in New Zealand has enough reason to cut their rates to support the economy, especially with the current situation where we expect the trade tariffs, we expect the new tariffs to improve, to increase the pressure on the economic growth and affect the economic growth as well. So central bank in New Zealand, as in the central bank in Australia, so what's the same thing with that, the central bank in Eurozone, that they are trying to cut the rates to support the economy. The retail sales in Brazil supposed to increase a little bit. Inflation in Mexico supposed to slow down in the data that we have on Wednesday. GDP in the fourth quarter and I mean we will have the GDP data for the fourth quarter from Russia. We expect to see a little bit more increase or more improvement in the Russian economy. Thursday, we'll start with the inflation data from China. We know that the inflation has been falling, has been weak. I mean, mostly it was in a negative territory in the previous months in China, especially previous month. In February, we had inflation at 0.2% monthly and falling by 0.2% monthly and 0.5% drop annually. But this month, we expect to see the inflation is going to be flat on the monthly base and see the inflation at 0%. That's what we have in China, which can be somehow the positive data for China. But on Thursday, the market will focus on U.S. inflation numbers, where we expect to see the inflation, headline inflation, to increase by 0.2% and core inflation increase by 0.3% on the monthly base. However, annually, core inflation is supposed to slow down from 3.1% to 3%, and headline inflation to slow more from 2.8% to 2.6%. Generally, the data is supposed to show that inflation is under control. And as I mentioned, if the inflation slows more, while the oil and generally the energy price also slowing down, that can increase the idea of more rate cut and support the support the stock markets. Support the stock market doesn't mean, I will show you on the chart, but it doesn't mean that they can increase. They may slow down its shortfall, but at least it can put the pressure on the US dollar index, as we talked earlier. Later on Friday, we will have some economic data from UK, especially industrial production, manufacturing production, GDP, trade data. Generally, the data we expect from the United Kingdom on Friday, it's somehow the positive. This week, generally, the data these data, mostly this week, the data we will have from the United Kingdom, they are mostly for February and March, and we expect to see a little bit more positive data from United Kingdom after almost 5 or 6 months slowing or weakening numbers. So from February and March, we expect to see a slightly better economic data, while we are still our concern is still increasing about the inflation. Inflation numbers from Germany also supposed to show that inflation is slowing down from 0.4% monthly to 0.3% and annually from 2.3% to 2.2%, and shows that the inflation in Germany also is under control, as it is under control in whole Eurozone. Same trend we are expected to see from Spain as well. But on Friday, we still have the producer price data or producer inflation from United States, we expect to see inflation PPI to increase by 0.1% on the monthly scale from after the flat data which we had in February, and core PPI increased by 0.3% after 0.1% falling in February. That means that the tariffs starting to affect in the market, and with this new tariffs, we can expect the producer inflation to slightly increase. 1 year inflation supposed to increase to stay around 5 or between 5 to 5%. We know that was about 3% previously in the previous months, but now it's increased to 5%. Generally, with this, if it increased more than 5%, I mean, it depends on so many data, but generally, the higher expected inflation can slow down the path of rate cut by Federal Reserve. But generally, we have to wait and see. Let's go to charts and see what we can expect in the charts and how the data are supposed to affect the markets. That's US dollar chart, and as you can see, this green candle for Friday is after Mr. Powell's press conference, or Mr. Powell's speech actually, where he told that we are not in a hurry to cut the rates, and we have to wait and see the more effect of these new tariffs on the U.S. economy. So that's support the idea of, the support the US dollar index to recover slightly after falling in previous week. Generally, if you can see, as you can see here in the chart, US dollar still moving in a clear downtrend. And in a bigger picture, you're expected to see around 100, 101 for US dollar index, this area. As mentioned, the US new government and new administration also supporting of the idea of weaker US dollar, not too much weaker, around between 98 and 100 is the ideal area for US dollar for the new administration. Not more than this and not lower than 98. So around 100 mark could be very the American would like to see your dollar index moves. This weaker expectation for US dollar doesn't mean that we can expect to stock markets to increase. Generally, the tariffs, the new tariffs, trade war, and slower expected economic growth, putting still the pressure on the stock market. But after such a big fall, it's normal to see some correction. So we may see some correction towards 5,400 US dollar, and then after that, after seeing the 5,400, 5,500, the correction around this, after that, we can expect again the downtrend can continue the trend. But generally, for now, after such a big moves, such a big fall, we expect some correction. Don't forget that this week, from this week or from the next week, actually, the end of the week ahead, we will slightly, step by step, we expect to see the earnings reports as well. So these earnings reports can can support the idea. Can support the stock markets. This depends actually what we will have as earnings, but still don't forget that earnings starts this week, and with the earnings reports, especially from, let me check, on Thursday, the main earnings will start on probably on Wednesday and Thursday. Yeah, let me show this. Here I show you this. Oops. Delta Airlines on Wednesday, and then on Thursday we will have this banks reports starts on Friday. JP Morgan, Wells Fargo, Morgan Stanley, and others, and all banks. Generally, from this Friday, the earnings reports also will start, and the markets and stock markets also will focus on this earnings report as well. Don't forget to follow the earnings and their effect on the market. Generally, we don't, as mentioned earlier, what I can see in the chart, we can expect some correction, but general downtrend is not changing yet. On the cryptocurrency market, this uncertainty in the market moves the money out from the stock markets. Where money goes, US dollar index, gold, and some of them to the Bitcoin and some other cryptocurrencies right now, which means that this sharp downtrend in the stock markets and money outflow from the stock markets can support the cryptocurrencies. But this support is not such a strong that we can say, okay, now we can expect another bull run in the crypto market, but now it's somehow the overall condition is positive for the cryptocurrency market. We can expect if the Bitcoin moves above 86,000, then we can expect around $92,000 as the next target. This is generally what's happening in the market and what we expect to see. If you had any other question, don't forget to write in the comment section. I will try to get back to you as soon as I can. Have a good time. Bye-bye.